Here we are, pre-market. What is it? Super Gap. What? Another holiday. We give our best to all the people out there in the world, but most importantly, yesterday was Martin Luther King's birthday, really, in a lot of ways, because it brings up a special day for people to remember. And that's what the holiday was about. So I hope that people really pay their respects or really know what that holiday is about because it's great people like that that make the world a better place. Now, what I'm going to say about the pre market opening gap is that you have an artificial price gap. You had all the bad news. Earnings season starts today. It's a very special day. It's 1/17 of 2012. It's at 6:20 a.m. Pacific Standard Time, and we're about ready to open that bell and make a market with the public. And who is that? That's a buyer on one side of the market and sellers on the other. And what do? We wait the buyer and the seller on that level, but then we're going to be in the earnings level. And we have a super gap Tuesday for one reason. It's a 4-day week, and I've already can tell you right now that the upper end of the market is pricing in anything good that can happen in the earnings that start today. And we've already had some bellwethers come off of the charts. We had the Citigroup out. They didn't do that well. And we also had a few others out. Wells Fargo, well, they're trying to manage in there. Um, and we've had a lot of things coming out. The headlines are overwhelmingly going to be extremely running. What I will show you here in the pre-market right now is the NASDAQ E-mini Futures 100. So what I want people to know is that they're taking this artificial gap early on, and what they're doing is they're selling that down. So if this is happening here, then that means that your price gaps at resistance are going to follow. Once they put in their intraday high, you're going to see that immediate reversal, as you will, from this pre-market gap. And it's headline related. You can see clearly in these NASDAQ 100 futures of that support level has become 2390. But they did get it right up to the 2400 level that we had looked at on the Nasdaq 100 chart, and that's going to be this Nasdaq chart right here. Here is a 3-minute on a Nasdaq, and here is where it was up here at 2385. One of the things I'm just showing is where they were, where they came down to. Here on a 3-minute was at 2354.09 handle. Yes, the markets did not have a very good Friday, and we've come back with all of these super gaps. So here's what the 3-minute looks like, and we're going to gap it way up here. So you're going to gap way above it, and you're going to gap right up at the highs above here. This is where it would become resistance levels. Once it comes up, it'll break that trend line, and then you would look for a decline in your NASDAQ 100. Now, as far as the S&P 500 goes, in the E-mini futures, you can see the same behavior here in pre-market, that they're breaking their support levels, as should, but then they're consolidating bottoms. So when stocks sell off from the opening bell gap, you're going to come down, but they're going to hit support. So the gaps, if you take a look, here's a big gap list right here. Google's up. This is the super gap. These are going to exhaust. Now, we did very good work over the weekend talking about exhaustion price action. And when price action to the upside is exhausted in the price is everything. On balance volume price, it really means a lot. And the volume weighted average intraday price levels of where equities are being accumulated and or sold are most important. How to sell the morning opening bell, how to let that stock run up, put that exhaustion gap, slide the previous half bar below it, where the math will change using your guidance, which is your platform, that will show you correctly that once they come down, just like you see here now in the futures, here are the futures, and they're selling into it. and they got this up to our price target. We don't have a short on it yet for this reason because they brought it up to that 1302 handle that Mario talked about. And now you're back down here to this 1297 handle in this market. So you can see that when these go down, that they're actually wound the tape up artificially, but look at how many pullbacks you've had intraday morning. And why do equities follow price action similarities mathematically? Is that when you had that pullback and now you've had two pullbacks here. Okay? Yes, they gapped them. Yes, they ran them to the high of 1302 off the low end. But look, equities will follow intraday. Yes, you will also have bounces, but the problem is you can see the tops in here and bam, and so they're starting to sell into it. Pre-market update. Another thing we're going to be doing very carefully is we're going to be watching for this particular 625 call for intraday. Your gap was 624.99, and they had marked those calls down to wholesale levels that we really enjoy. And when I say enjoy, we do. However, they are to make a market wholesale. So what I'm going to say is let's set some alarms below the floor between now and Thursday. Let's get some alarms out there at 1540. Let's get some alarms out there at 1580, and let's get some alarms up here at 1640 below the marketplace. And let's watch the 625 call. Your closing was 624.99. Okay? And that is one. We're going to be also watching the 630 put that has been marked up for quite a few days. And is there going to be an adjustment between this markup and the call marked down? What will end up happening is you got to get above 632.89, and at the end of the day, you got to close above it. However, when you run up and challenge those resistance levels, you're going to need to still be looking at the 630, the 635 put, because they report earnings on Thursday. And this particular market is going to be highly, highly volatile and highly, highly risky. So whether for the put side or the call side, they mark them down. And once again, welcome to the earnings season kickoff 1/17/2012 pre-market futures update. Not only that, trade management, dollar cost capital risk management. If the world would do it that way, the world would be a better place.